is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Tim Raines, the founder and CEO of Rare Innovation, a boutique consulting firm that acts as a true outsourced executive team for deep tech startups. Tim is a seasoned expert in science and technology commercialization with a career dedicated to turning complex research into viable market solutions. He has helped hundreds of companies and SBIR-funded projects move out of the lab and gain real-world traction, offering clear go-to-market strategies, product development guidance, and even visually compelling pitch decks. Tim, thank you for joining us.
Great. Thanks to be here, Hall.
Great. So where are you calling from today?
I am in Denver, Colorado.
So tell us more about the mission and origin story of Rare Innovations. What exactly is the problem you're solving?
All right, great. Yes, I created Rare Innovation out of a deep frustration I had witnessed over and over again, where I saw incredible technologies, mostly backed by federal R&D dollars, are coming out of universities that just fail to reach the market. Not because the science or the tech wasn't sound, but because founders in this area typically lack commercialization muscle to take the first real step into the market. So yeah, I had built a bunch of deals through my Fortune 50 work experience in sales. And I just saw an opportunity to translate those skills into something in the startup world, especially these kinds of technology founders that just haven't ever experienced even a business class, and oft in many cases.
Right. Well, tell us more about your experience in guiding startups to the commercialization of new technologies. What's been your path there so far?
I had gotten my graduate degree at the University of Texas in the science and technology commercialization. So that was kind of my first real introduction into this ecosystem beyond just what you traditionally think of as a startup. So in 2007, I was working with some R&D companies in Austin and elsewhere, actually globally. And I came through the funding side, helping them secure non-dilutive capital for their technology, but quickly realized that what they really needed is beyond that, is the business development, the commercialization, and having their first marketing or sales-minded executive on the ground for them.
Great. So tell us more about the key lessons for helping founders translate R&D into investable business models. What are the core lessons that need to be learned there?
Yeah, I've got I think a number of lessons in this space. Shout out to a friend in Austin, startup ecosystem, Kenan Rapucci of Celerant. One of his sayings has really stuck with me in this space, especially, is that founder makes the first sale. And I think that's something that when I see one of these, folks come out of the lab and really understand that it's not going to be me, it's not going to be the government or someone else, or someone's just going to buy it. They have to get in there and sell. So that's probably my number one lesson. Similar to that, technology isn't the product, and, validate early versus perfect planning. I think getting engaged in the market very early is a big deal. And, I could go on. I probably have a dozen lessons. But yeah, I think, they also have to understand that they need to speak a different language. The way they communicate, translating R&D into a business speak is a form of cultural translation. And scientists, they speak evidence, but the market, I think, speaks urgency. Investors speak return. So you have to be multilingual to succeed.
Mm-hmm. And so how do you identify product market fit in a deep tech or hard science startups? How do you know you're there?
I think you've got to do a lot of customer discovery, engage the market, and talk to the people that you think have an interest, and then really focus in on the early adopters. I think it's usually one customer or two that are desperate to have what you have, and be willing to take the rough edges. So I look for kind of an evidence of urgency in the market, not just, basic interest. Secure a pilot deal and really get, some feedback from a real go-to-market partner or a customer that's willing to work with you in this early stage.
I find scalability is equally important. And at the very early stage, that can be hard to figure out. How do you validate scalability when it's in the lab phase?
There's a lot of different aspects, right? So there's manufacturing scalability. Some people can do the low volume manufacturing if it's a device or a product, but I think difficult to tell until they started really going out for the some or getting some seed funding beyond getting to later TRLs. The product is really ready for market. But you do a lot of market research. You determine your TAM, SAM, and SOM, and try to make your best stab. Is there demand on the market side, and then is it buildable at scale?
Okay. And so what are the trends you're seeing in the early stage funding and innovative ecosystems today?
Funding is up in the air right now with the non-diluted funding. I mean, I think so there are some newer opportunities that you have to use to get through the valley of death. So, I think the shift in VC or I'm sorry, in deep tech is, VC is going to be a little more cautious, less patient, and the DOE and others are starting to roll out kind of ecosystem solutions. Like voucher programs is a thing that you'll start seeing out of the Department of Defense, Department of Energy, where they're doing in-kind support for product testing and in open water, say it's marine energy or quantum, where they might partner with the university to help you push that forward. So I think that funding is, you just have to get creative right now, and I think strategic partnerships are starting to play a bigger role earlier, and we're seeing a lot more corporate venture companies get in with all kind of seed funded programs like Chevron Venture Studios at NREL and other kind of programs where they can put a little money in, pair you with entrepreneurs, and to try to get those technologies to the next level.
You think the corporate funding or the paid pilot projects are going to fill the gap of government funding, or is it just going to be a piece of that?
I think it's kind of a piece of that. You've got to really understand the ecosystem. One of the, I think, sure ways to fail is to rely on the non-diluted funding. That's the sign to me that those innovators are not serious about even licensing, much less a startup. So if you're not engaged in these accelerator programs, whether it's government funded or a Techstars, or Innosphere plug and play, then you need to rethink your strategy.
So, what's your approach to validating go to market strategies in these limited resource times?
I think the go to market strategies is to really convince the founders to stop chasing perfect and chase proof. So validating and with real world pilots, real world opportunities, partnerships are key, and I think that's what most people have found valuable when working with Rare Innovation. Is I try to make sure they have a commercial partner that's willing to test or validate the product, joint development agreements, or just saying, if you can get it to this level, we'll take the next step.
Right. Well, in addition to partnerships, how does Rare Innovation support founders beyond capital?
Yeah, capital is just part of the equation, but we really kind of focus on the post-funding execution. So the where strategy meets reality, the go-to-market roadmaps, customer discovery, negotiating partnerships, and even some licensing or acquisition opportunities. We're definitely involved in mentoring at a lot of the accelerators I mentioned earlier. I mentor founders directly, as well as if needed, take a formal advisory role. That's kind of our role beyond capital, is just driving partnerships and making sure that they're continually moving the puck down or the ball down the field.
Talk about some of the mistakes you often see technical founders make and how to avoid them.
I think one of the biggest mistakes is falling in love with the technology and not the problem. They may have something game changing, but if you're too deep in the science and forget to ask who really needs this, or what is the pain and what will they pay for it, I think it's a big mistake. Not engaging in the market. You can't stay in the lab. You can't continue to iterate. You've got to take action, and then so waiting too long to talk to the market is I think a very big mistake.
I've often wondered why people, when they get a grant from the government, especially a phase two, for example, $1 million or more, that they don't build an MVP, but yet they write another white paper. And I wonder, if you write a white paper, you're probably not going to raise money from an angel. But if you build an MVP that somebody can look at and test, well, then you're probably in the game for it. What are your thoughts there?
Yeah, the whole intent of the SBR, the phase one is lower, and yeah, you can come up with a feasibility study or a white paper might be the result. But definitely phase two awards, the $1 million is expected to have some kind of MVP. And I don't know if there are people that succeed beyond that without it, but I've in my experience not seen that at all. In fact, I'd say the companies that I've had the most success with will create an MVP in phase one on that $150,000, at least something. And even if their product is more complex, say a medical device, just anything they can do beyond the white paper puts them in a driver's seat for that second round of funding from the government.
Right. Well, I've always told startups, if you can't build the MVP in a certain amount of time for a certain amount of money, then you've scoped it too broadly. You should be scoping it smaller. What do you think about that?
That's great advice. I think that I taught in my college entrepreneur course. There's a dozen ways to make an MVP. I mean, you've got to get if you can just get someone's hand on a cardboard cutout or a wireframe or anything, that gives you feedback, that gives you some access. So scope it down if you can't afford to do more than that.
Great. So, what's your views on what accelerates or stalls tech adoption in enterprise settings? What's your experience there?
I think the understanding how enterprises operate, they're matrixed organizations is very important. And that's one thing I learned, in the excellent sales training at the big Fortune 50 companies is, you're going to have a champion, you might have a fox, someone that you think is interested, but they're really kind of protecting their job or some other competitive technology or just keeping the way things are. So I think you've got to really understand that it's a complex beast. Funding doesn't necessarily come from the decision makers, or there's a lot of
Mm,
politics in that ultimate decision, and you have to know what their value is. What are they solving? What external is driving them? Is it competition? Is it underperforming stock? If it's a public company, read their 10Ks, find out what their pain is and why they've engaged with you.
I'm a big believer in anchor clients where you get a company to do a paid pilot and they're helping you build your product or validate it at least. What's the challenge there with that? How often do you see that get done versus not?
Getting a paid pilot done,
Yeah.
I think if you find the right partner, someone that's truly interested in new innovation and pushing the envelope, you can certainly get that done. I wouldn't get hung up on the paid part necessarily if it means proving the technology, proving the business case. And in certain industries, when I deal with climate tech, clean tech, there are groups like EPRI for utilities that put together all the utilities and they take submissions, just like a pitch, and they will pay for the pilot at one of the utilities that's involved in the community. So
Okay.
there's find a way to do it, see if your industry offers those kinds of things, but get it done if you can afford to.
You think they take it more seriously if they're paying money versus if they don't?
Absolutely. Yeah, I think, just like anything, value is, oftentimes, secured with that payment or, a deeper commitment. And I think they will take more interest for sure.
Great. And so we see a lot of angels coming into the deep tech ecosystem, and VC as well is starting to shift in there as well. What's your advice for new angel investors or venture builders that are coming into the deep tech space?
Yeah, deep tech is a an interesting animal. It's not SaaS. It's not maybe some of the things a lot of investors are used to. So don't just bring capital, bring capability. It's the same advice in reverse that I give to my investors. Don't just take the money. It has to be strategic money, money that will work for you. So, the companies that I work with have breakthrough innovations and maybe some validation. The federal government, has basically said we want this technology to exist. So they could even be a client. So it's a good opportunity, but you have to understand that I think what a lot of investors see normally they look at technology and team. You may not find a well-rounded team, and so that can be something to take some caution. And understand team makes it very important, but you take the chance. The technology is probably there. You probably bring connections Just understand you're going to have to be a partner with a lot of these companies to shape the team and get them to where they're kind of operating on their own over time. So I think that's probably what I would see differently. I think corporate VCs specifically get in early. A lot of these companies need letters of support to get that non-diluted grant. The way I see it is that's a potential $2 million free R&D check that you get to maybe guide how that R&D is done. Why not get in with non-binding letter of support? Take advantage of that opportunity. If it sounds like it's a fit for your company, take advantage of that, and you're first in line for something that could be of interest.
Well, I often find the founders of these companies are from the lab themselves, and so they're more CTO than they are CEO, but they want to lead it as a CEO. And my experience is that the company grows a little bit under that, but it very quickly stalls out and goes sideways. What's your take on the CTO asking as the CEO?
Yeah, I think that kind of goes to that team thing and one of the risks for investors. And, I try to, be very clear with my founders. It'd be, I've thought about having an industrial psychology component to Rare Innovation is to really talk to them about, are you really a fit for this? And do you understand what it takes to be CEO? I think, unfortunately, that's a rare trait. You can learn it. Anyone can be a good CEO, but you have to understand that it's a very different thing, and you may not ever go back into the lab if you're doing it well. So that's critical for the investors. I think you need to be direct with them and say, I can fund them, but I'd like to bring in my own person or some other CEO, at least as an interim.
But I find it's very, very transparent what's going on. They're not fooling anybody because they have a long list of patents and white papers, but no previous business experience. And I tell them, investors see you coming from a mile away, and this is going to be a problem for them. They really want someone with business experience here before you're going to raise funding. So I sometimes wonder if they really understand that. They think, well, maybe I could just hide behind all these white papers. Well, no, that's what's giving you away.
Yeah.
Real business people don't have those white papers. They've got business success stories is what they've got.
Right. Yeah, I think you're right. And they try to put enough effort into learning, how to pitch or raise capital, but they don't really realize that, even if they were to succeed with the capital, their job is changed. They have to become the founder that does make the first sale, literally. And that takes a lot of effort. So hire someone underneath you to work the technology that you believe can do it, because running the business is your job one.
Right. Well, in the last minutes that we have here, what else should we cover that we haven't?
I think if you're out there thinking of non-diluted funding and in the deep tech space, be patient right now. I think dual use, if you're from an industry like clean tech, climate tech, dual use, meaning that, if there's a defense application, pursue that. That's where the funding is going to be through the remainder of this administration. The funding is strong, the activity is strong. And then, investors don't run from these opportunities. They are funded. They do create some amazing technologies, but you have to look at them very strategically, make sure they align with what you do, and, be prepared to, maybe take more equity, but provide, leadership, whether it's, a hired gun or yourself that goes out and makes those first deals if you have to.
Great. So how best for listeners to get back in touch with you?
They can always reach out to me at tim@rareinnovation.com or LinkedIn. And it's, Tim Raines, and the company is Rare Innovation.
Great. We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Wonderful. Thanks very much, all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.